I'm here with Bart Mellick. He's the head of global commodity strategy at TD Securities to talk about commodity reaction to the U.S. election last night. Nice to see you.
Great to be here.
Let's start things off with, I'd like to talk about gold, oil, and copper, because gold, if I'm not mistaken, biggest reaction we've seen since Brexit. And then it moderated. It seems to have come back a bit. So what's going on?
Well, shortly after it became quite apparent that Mr. Trump had a clear path to the White House, there was a very considerable risk-off reaction in equity markets, and of course, gold being a hedge against risk, reacted positively. We moved as high as I think 1337 and stayed there for a while. But shortly after Mr. Trump gave a fairly conciliatory speech, embracing, even his opposition, promising infrastructure spending and all the good stuff that one would expect from a presidential winner, markets came down and gold traded lower to now not far off where we started 24 hours prior.
So when you take a look at gold then, in terms of the next, we've got a lot of things that are going to be coming out in the next little while in terms of, who his cabinet might be, the first 100 days, the priority transition teams, all that good stuff. In terms of what could happen with his policies, if he's anti-trade and, there's all sorts of disruption that could happen. What does this mean for gold in the short, medium, and long term?
Well, I think the situation is going to be very, very fluid. We're going to have to decide, clearly the administration that's going to be formed will have to decide whether they are a populist administration, the one that wants to build a wall, ship 11 million Mexicans from the United States, erect trade barriers against its trading partners, or does it want to be a pragmatic administration, taking everything, with a sense of uncertainty and trying to be accommodative with the rest of the world and the opposition internally? And I think what will matter very much is what the transition team looks like, what the cabinet that he's seeking will look like. So far so good. The market, I think, is buying into the idea that this could very well be a pragmatic administration, a Mr. Trump that will help infrastructure spending, lower taxes. He certainly has a Republican House and a Republican Senate that can help out. And I guess, the big answer is we'll see. Early last night, when it became apparent that he is on the path to winning, the market was quite concerned about the global economy, and there were a lot of people in the marketplace who thought that this surely meant that the Federal Reserve would not hike rates in December. That certainly doesn't seem to be the case anymore. The Fed Fund futures are telling us that the probability of a December hike is just north of 70%, and that means there is confidence out there that things may very well be okay.
So gold will be fluid. We're going to have to wait and see where that one goes. Although we've seen, I think people will be watching it closely, it sounds like, just given all the fluidity you just mentioned in the last minute. Copper. We saw copper move up, and tell me why we saw that. Well,
copper had a very big move. We moved to around 5,500. We've been, in fact, on a bit of a tear in copper for the last few days. As far as we can tell, there is quite a bit of Chinese interest in copper. The positions are being taken on the long end by institutional investors. But relating it back to last night, initially there was a negative reaction to Mr. Trump. It improved along with increased risk appetite, incidentally at the same time as gold fell. And the thinking is now that we could very well have a situation where copper benefits from infrastructure spending in the United States. At the same time, the expectation is that emerging markets may end up doing okay, particularly China, and there is institutional interest in copper. So I think if you're looking at everything, you're probably not looking at a very robust interest rate hike environment going forward. At the same time, you're looking at improved demand prospects for copper. So it has been positive.
Finally, oil. What do you think is going to be happening with oil? And by tangential, I know oil equity is not where you cover, but oil prices. Anything interesting going on there right now?
Well, right now we're doing a little bit better than we were over the last few days. Again, initial reaction was down.
Yeah.
Now I think as we speak today, it has improved, and certainly Mr. Trump's disdain for green policies, I think on the demand side will help oil out a little bit. Certainly for a country like Canada, we're probably likely to see pipelines from Canada to the United States, probably reversing the Obama administration's rejection of the Keystone XL pipeline, for example. But certainly it's not a bad deal for crude. We're very likely to see less green policies from that administration.
Then let me ask you just a final question. Again, if you pull up from all this, and again, I know we're hours into this news, so I mean, as you mentioned, things are fluid, but what's the one thing you think, or a few things people need to keep in mind when it comes to commodities and what you're going to be watching as you move ahead?
Well, we're going to be very much watching of what this administration wants to be, what messages they give to the world in terms of are they going to be pragmatic and willing to compromise. We do, I think, all acknowledge that they will have to give something to the people that got them there in the U.S. Rust Belt, the so-called disenfranchised group economically. But I think it will very much matter how this is done. Certainly, we'll be watching what the Federal Reserve is saying in December and what the bond market is looking at. At this point, we certainly see the possibility of more fiscal stimulus due to lower taxes in the United States, a bit of a steeper yield curve, which is not usually a good thing for commodities, but at the same time, it could very well mean that we're seeing higher budget deficits in the United States, and that traditionally has been a positive for gold. So ultimately, the devil is in the details, and the commodities will respond accordingly.
Bart, always a pleasure. Thanks so much.
Great to be here.
Bart Mellick, he's head of global commodity strategy at TD Securities. I'm Kim Parley. Thanks so much for watching.